Welcome back. I'm Pratap here. Today is the 4th December 2023. So before we generate demand and supply zones, let us evaluate the performance of high liquidity zones generated in our last Friday's report. Even before that, look into the Nifty, how strong the market is. It's a bullish market. When we have such a strong market, generally we get an impression that all the supply zones will be broken. But look into the power of the high liquidity zones, how they are holding the prices. So from our last report, the first one is Britannia. So there is a rejection from this high liquidity zone. Prices narrowly missed in reaching our fine-tuned area. Prices are just about to enter thereafter. How the power of the high liquidity zone pushed the price down. Even though we didn't get the entry on the stock, but see how the prices went down, even though market is such a bullish. So that's why I always say high liquidity zones are always having so much pending orders. Actually, it reached the 15 minutes target, the prices, but we didn't get the entry. That is the point you should observe. Because we have fine-tuned at 75 minutes level. So inside this 75 minutes, again we identified several 15 minutes zones. So this one is already tested. So I want to show you that. But we were expecting an entry, the one above that, but it didn't happen. Even the first, the already tested zone itself is not, prices are not reached it to that level today. This was supposed to be a 15 minutes target. It didn't happen. During the first morning hour itself, prices violated this 15 minutes. That itself is indicating the supply is very strong in this stock because it is a high liquidity zone. So overall market does not affected this stock. Same thing happened to the next stock also. That is Jindal Steel. This is also, this is a demand zone. Because demand is very strong today, see, even before prices enter into itself, the price pushed up. That means we didn't get an entry today in this stock. This is the high liquidity 75 minutes demand zone. So this is the high liquidity demand zone. So we didn't get an entry in this stock. And the next one is, we have one more stock, Bosch. This is a fresh zone. Drop-based drop. Inside I have fine-tuned the 75 minutes. And even here also, prices did not enter into this zone. So before entering itself, the price is pushed down. Definitely one possibility is there. There could be some entry buffer area before this. But you should remember, entry buffers mostly we know only after the price action. So now price action is completed, now we are able to tell because of these strong rejections from this area. So anyway, we didn't get the entry, whatever we fine-tuned, but reached the target. No use in reaching the target, right? If we don't get the entry. But why I'm showing you? Just to tell you the power of the high liquidity zones. Because we've been publishing high liquidity zones for the last 2 months. Even I have uploaded the Excel sheet of the last 2 months' performance in our Telegram group. In case if anybody did not look into the Excel sheet, please look into the Telegram group. If anybody is watching this video first time, you can find the Telegram group link in this YouTube video description. There you can find the link. So all the three, these are the three stocks we have identified from daily time frame and 75 minutes time frame from our previous report. So we didn't get any entry, but I already told you, keep Jindal Steel in your watch list because it is having both high liquidity demand zone and supply zone. I clearly told you, you get a lot of opportunities in this stock. Keep this stock in your watch list and keep on observing. So today we got the entry. Let me show you the Jindal Steel. See, here we have a high liquidity demand zone. We have a rally, you have two base candles, and again we have a rally. This is a hidden body. This candle is having hidden body. This is a hidden demand zone. That is what I told you. And already existing high liquidity supply zone is there, and which is testing and several times. And inside this again we identified one more high liquidity zone, that is LOTL, level on the top of the level. And there again prices are keep on testing. That is one thing. Apart from that, there is one 75 minutes newly created high liquidity zone. The 75 minutes itself is a high liquidity zone, which is inside the daily high liquidity zone. We have discussed about this stock earlier, but again I am telling you today because we got an entry today. So let us go to the 75 minutes. So this is the 75 minutes zone. It's keep on testing. It is a high liquidity zone. See, several tests we got within the 75 minutes. And recently inside this 75 minutes, a new 15-minute zone is created. Recently, a fresh 15-minute zone. Let me show you. See, here we have a rally candle, a base candle, and a drop candle. If you draw the 15 minutes zone, it is going to be something like this. It is going to be something like this. Because the risk is very high, what I did inside this 15, again I fine-tuned to 5 minutes level. Let me show you that. You have to understand how we are managing the risk. This is the concept I am going to teach very soon in the second phase of the training program. See here, inside we have a drop, we have 3 base candles, again we have a drop. And in this fine-tuned zone, the 5-minute zone, we got the entry today. And the risk is very less here, only 3,000 rupees risk, which is less than 2% ROI. That is a negative ROI in case if the trade is failed. And it is a fresh zone. This fresh zone is inside the 15-minute zone. That 15 minutes is inside the 75 minutes high liquidity zone. That 75 minutes high liquidity zone is inside the daily high liquidity zone. See how we fine-tuned this. And this is we fine-tuned because of the top-down analysis. And today, look into this. We got an entry. And after that, how the prices came down. And this is supposed to be our target, the 15 minutes target, because we know most of the times the prices are reaching 15 minutes target during the intraday. We have fine-tuned to 5 minutes entry. But during the intraday, the target is at 15 minutes level. Generally, when the prices reach 15 minutes target, within 3 to 5 days, because they are DIT targets. DIT targets are mostly few days to within a week, prices will be reaching the target. But our high liquidity zones, providing the target in just one day, that is during the intraday itself. So the price is almost reached, just 50 paisa. Before this, it is failed to reach. Maybe this demand is very strong, pushed the price up. So maybe those who have exited just before this, by keeping some buffer, maybe you got the profit. But at least those who are waiting for prices to reach this, narrowly we missed. But still what happened? Again, prices went up, looks like coming down. Let me go to the 15 minutes to bring the clarity. Now again we have a ERC candle, two base candles, and again we have a leg out. We have a drop base, we have a rally base, rally. So a new demand is created. When a new demand is created, you have to alert yourself immediately. Market direction is changing. Then you have to change your target immediately. That's why I told you, even in our 10th lesson, in our training program, the 10th lesson, why many people fail in the stock market. In that lesson, I clearly explained one of the reasons why people fail, because market is dynamic. People always believe on the calls provided by some people. Let us assume I am providing you a call. I would have told you this is the target. The demand zone below, the old demand zone, I would have told you the target. You are waiting for prices will be reaching this target. But few paisa before reaching, again price changed the direction. You are waiting, and it never reached the target today. But most of the times what happens? Prices again give one entry and after that it will further go up. We have seen such kind of stocks also previously. Today, luckily, prices didn't go. It stayed there only, near the second target. But people who are not aware of these concepts, people purely blindly follow the concepts. They always think market is static. When somebody gives you the calls, they think, okay, they are the final. But that is not the case. Market is always dynamic. When it is created a new demand zone, see again how we should change the target. We have to act accordingly. That's why we are not believing on the calls provided by the people. We are believing ourselves. That is the reason why all you people who are watching this video, you are all learning your supply and demand zone concepts. You are not believing on somebody. Why you are attending my video? Just to improve your knowledge, just to observe what I am doing. That way you want to gain your experience from my knowledge. So you are believing yourself. So always you believe market is the dynamic. Because you have the knowledge, what you do? Immediately you will change your target. Because a new demand zone is created, you won't bother about the previous target. Now your target is changed, prices went up and again reached. Immediately at 1 o'clock, 30 minutes candle, it reached the new target, you exit there. That's why in the Telegram group, after it reached the second target, I have posted this chart. Because this is a learning process. We're all learning. When you are learning the new things, then you will act in a dynamic way. You never think like a static way. Because I have seen many people, they say, it is a set and forget. Supply demand zone is a set and forget theory. That is not right. Maybe most of the cases it will reach the target, but there are scenarios, because market is dynamic, the scenarios will change sometimes. When institutions create new demand, you have to respect that. We are not creating the demand zones and supply zones. Institutions are creating. Then we have to act accordingly because we are following their footsteps. They are not following our footsteps. When they create a new demand, you have to respect that, a new demand. The two possibilities. Again, institutions may create a new supply and they push the price down. That is also possible. Sometimes they want to trap us. Because today we revised the target from this old demand zone to old target to the new target dynamically during the market trading day, and it reached the target. But this itself has given 22,500 rupees profit. It is an excellent profit, which is 11.52% ROI, return on the investment. The RR is very good for this particular stock during the intraday. That too, DIT target achieved during the intraday. Why I am saying this strategy is a powerful strategy? Because it is a high liquidity zone. A lot of pending orders are there. They always push the market down in a speed manner, especially during the intraday. We need not wait for next 3 days or 4 days to get the target. Whatever you are supposed to get your target in next 3 to 5 days, same thing you are getting within a 1 day itself. Earlier, I was even against intraday trading, but I am not considering this as a intraday trading. I am considering this as a short-term trading, but achieving that results during the intraday itself. That is what you have to understand. Generally, in intraday, what we do, we take an entry in 5 minutes, we exit at 5 minutes. But we are not doing like that. What we are doing, we have adopted a strategy inside daily high liquidity zone or inside 75 minutes high liquidity zone. We are taking entry, but we are not taking just like that. We are fine-tuning the entry by applying the strategy based on the top-down analysis. There we are taking the entry. And then we are looking for our target on 15 minutes instead of 5 minutes. All these days, 2 months, we've been doing the same. We have all the results of the last 2 months results in the Excel format. Whatever is there, everything I documented and uploaded. And whatever is there in the Excel sheet, all these things are there in our daily videos. I have extracted data from our daily videos. If somebody asks, where is the proof? Everyday video. Every day, whatever today, this particular trade, whatever we are discussing, that data I am again uploading into the Excel sheet. That's it. Excel sheet is giving us, okay, last 2 months what happened in one glance easily. Otherwise, if you want to go through every video one by one again, you need to spend several hundred hours of hours. Any video, if you want to refer, Excel sheet, the reference I am providing, which day, YouTube video, we have discussed that particular, or we have generated a trade, those details from our reports, I have mentioned the date in the Excel sheet. Anybody, anytime can get into that YouTube video. You can study what the trade, whatever we discussed on that day, the detailed discussion, you can find in that YouTube. But remember, this is an important learning. Previously also, couple of times I have explained this concept, and again today I am explaining you. The reason is this is the way you are supposed to trade. There are times you may fail to achieve the target, but immediately we have to identify the new target. So the two ways you can identify the new target. A new 15-minute zone it will create, or you can go to 5 minutes, continuously 2 5 minutes demand zones created. 2 5 minutes demand zones are created. Then immediately the recent demand near to the price, whichever the 5 minutes demand zone is there you can take the, there you can fix the target. This is another, please remember, in this example, a new 15-minute zone is created and you have exited. In some other times, new 15 minutes demand zone won't be created. The 5 minutes demand zone will be created. Most of the times 5 minutes demand zones will be created and that will be violated. But a 5 minutes is created, on the top of that one more 5 minutes is created, then again you have to alert immediately. And such kind of trade also we have seen previously in one of our earlier discussions. the 5 minutes, two continuous 5 minutes. Okay, this is about Jindal Steel. So we've been keeping in our watch list for the last few days, and today it has given excellent return for us. And apart from that, because generally what we do, we don't look into the earlier reports, only the most recent earlier report, only we look into the trades. The reason is volatility will be changing, and mostly we don't look for previous earlier reports. But rare situations, I look into the previous earlier report. The Thursday report also I referred today. The reason is today we didn't get any trades from Friday's report. We got Jindal Steel. Jindal Steel we've been monitoring for the last 1 week. That is a different story. But Friday's point of view, none of the trades are executed. And our high liquidity zones, supply zones, even the market is bullish, our high liquidity supply zones are working in a strong way. That is one reason. And the second reason I have taken is I have taken a couple of trades which are having a fresh zones, high liquidity zones. So Thursday, the two zones identified is one is Bajaj Finance and another one is the Conquer. Look into the Bajaj Finance. First, let me go to the daily time frame. Is it daily HLQ? No, this is 75 minutes HLQ. So let me change the time frame to the 75 minutes. So we have a drop. We have a rally candle. This is not a drop candle. This is a rally candle because it is a hidden body. And then two base candles and drop. Generally, the zones having that hidden zone with some hidden bodies. Mostly they work very well. That is what I told you. On the top of that, this is a high liquidity zone. So we have two advantages. So inside this 75 minutes, I have fine-tuned to 15 minutes level. So we have a drop, base and drop. See here, this candle structure is not good because many people may say this is a base candle. But for me, it is. I am considering this is as a leg candle, ERC candle, because of considering the candle structures in the previously and later. How I am considering, my experience says that. But you may say this is just a base candle. So I am not denying your understanding because you get better understanding. I'm always feeling this candle length is a little higher and you are not seeing the real length of this because of the visual representation issues due to this gap, this big candle. All these things are showing you this is looking like a small candle, but actually the zoom, see here now, you really understand the moment you zoom. Compare it to the other candles, the length of this candle is at least it is having the double the size of the other candles. So that way I am considering, time being I am considering this as a leg candle and two base candles and a drop candle. Because this structure is not clear, within this structure I want to fine tune at 5 minutes level. So what I did, I went to 5 minutes. So here 5 minutes we have a rally candle, two base candles and a drop candle. That way we have drawn this zone. And today we got the entry. But a real issue is there. We got the entry. Twice we got. One is a 925 candle and another one is a 930 candle. 915 candle also almost reached, but see the rejection just before entering into this. Okay, now target. Generally what we keep our target? At our 15 minutes level. So this will be our target. So drawing a 15 minutes demand zone. Okay, now the real issue. Do you take this trade? Do you have confidence that it will reach the target? The reason is there is a gap. From this 15 minutes demand zone point of view, it is a professional gap. When there is a gap, what we do most of the times, we exit before the gap. So whatever we have drawn in this gap area, the blue color area, see it reached the target, but went a little, maybe the pending orders in this gap area again pushed the market. Maybe the demand is increased and after that market didn't come down. But at the same time, the zone, the high liquidity zone also holding the prices. See how it is holding. Now this 5-minute zone is acting like a 5 minutes high liquidity zone. Such kind of price the hold, it is holding the price because the liquidity is very high in this zone. That way we can confirm this could be a 5 minutes high liquidity zone, which is keep on holding the prices. See, the moment the price entering, again it is pushing down. Maybe the demand is also very strong. Maybe the demand is also equal today. And it is holding, again the demand is holding. Somewhere here, let me draw a blue color line to bring a clarity. So somewhere here, there could be a demand zone at 5 minutes level or 3 minutes or 1 minute. You may find a demand zone there. So there could be some demand here. Let me draw. We have a rally and then we have base candles. See, this demand is holding the prices. And this supply, because the distance is very narrow. This is also this 15 minutes, this 5 minutes demand zone also could be a 5 minutes high liquidity zone because it's keep on holding the prices. But the distance is very narrow, we are not getting enough RR. If you want to take multiple trades, you didn't have enough RR here. Okay, forget about this. What happened after that? But has it reached our target? Yes. This is one way we can calculate the RR wherever the professional, because this point you are already aware of that. But there are times the professional gap area might be very close to this zone, even might be very close to this zone. At the time, how to take the trade if you want to take? Because this high liquidity zones are always having, I'm saying most of the times, it is having capacity to push the price up to our average return on the investment. What is our average return on the investment? 6.1%. So what I did, not only I marked my target in this professional gap starting area with respect to this is the professional gap with respect to our 15 minutes target. Where the gap is starting, there from here to here, one target, or other way you can calculate is, forget about this professional gap for time being, because our average return on the investment is 6.1%, you can also calculate based on that. How we can calculate? A simple calculation, let me show you. Because most of the times before trading day starts, I do one exercise. What I do, whatever the 15 minutes demand zone I'm drawing, mostly is it having 6.1 average return on the investment is there or not, I will cross check. How I cross check that calculation, I will explain to you. Because which stock it is? Bajaj Finance. Margin calculator I am opening. So one futures, because calculating based on the futures lot. The 6.1% return is based on the all these days, whatever I am telling, 6.1% average return on the investment, that is based on the future slots. Maybe if you are using options, the strategy, the value calculations might change. So net quantity is, sorry, this is not Bajaj. Bajaj Finance. 125 is the net quantity. 166,414. So morning when the prices are entered into that zone, at the time the price was around 166, 161. 1,66,161. Now based on the current value, now the value is changed few hundred rupees, 1,66,414. Okay, anyway, whatever you are seeing, let me calculate based on that. So, see this 1,60,416 rupee is your investment. That is the margin value is your investment. And every day we are getting our profit based on this investment, the 6.1% average, whatever we calculated, based on this value. So let us calculate what is 6.1% of this total value. So let me copy this, our investment value. The margin is our investment value to buy one future slot. So let me take the calculator. This is our investment. What we need to calculate? 6%, 6.1%. So into 6.1 divided by 100. You will get what is the value. So 10,151 is your profit. What is your expected profit? Minimum this much profit you will get as per our high liquidity zone intraday strategy. This stock is supposed to give you this much profit. Near to this, because sometimes prices may reach a little above this and again turn back. Sometimes prices are not sometimes, many times we have seen prices are giving target even much higher than this value. Many times we have seen our average, above our average value we are getting profits. Okay, let us assume this is your profit, 10,151 rupees. So let me copy this 10,151 rupees. Okay. Now what is the lot size? 125. So what you can do, if you divide this with your lot size, a single stock value you will get. What is your for 125 stocks? This is the return on the investment. Then what is the, for one stock, what is the return on the investment? So 10,151 divided by 125. Simple mathematics. Now 81 rupees. So forget about this fraction 5 times for easy calculation. 81 rupees is supposed to be your profit for one stock. So that means the stock price should go down by 81% because it is a short trade. The price should go down from 81 rupees. From where it should go down? From our entry it should go down. So what is our entry? This zone value. What is the value of this zone? 7143 something. Let us see. Let us calculate in a perfect way. Okay, what is the low of this candle? 7143.80. What is the low of this value? 7143.60. So 7143.60 minus 81. 7143, or you can say 7144 for easy calculation. 7144 minus 81. So 7,063. Something wrong happened. Let me see the value. What is the low of this candle? Low of this candle is not 7143, 7413. I'm sorry for mistake. 7413. Look here in this value. When I place my mouse, observe here, L value. I'm keeping my mouse on this candle, 7143.80. And this candle, 7143.60. That's why the round value I'm keeping 74. Again I'm saying 71. 7414. 7414 is our entry. Let us assume 7414 minus 81. So 7333. Look into this value, 7332.05. I have already drawn. The fraction value, whatever is there, I ignored. That's why. So that means your target is 7333. So is price reached that value today? Let us move to 15 minutes because this is our 15 minutes target. So today it reached the target at 9:45 candle. When we got the entry at 9:30 candle, we got the entry, and at 9:45 candle, the next 10 minutes it reached. Next 10 minutes it has given 6.1% return on the investment. That too on a bullish day. The market is very strong today. Even then, see how the prices went down. See, the prices moved up with a gap. See the overall, how much profit Bajaj Finance is given 148 rupees. It is 2% prices are up. Even then, the prices were up to the high liquidity zone only. After that, it is unable to move further up. It pushed the prices down. How much it pushed the price down? The more than 6.1%. See, prices went even below this. That means more than 6.1% it pushed the prices down. That means we got 6.1% target achieved. And that too, within 10 minutes it achieved. Sorry, this is 15 minutes candle. This is 9:30 candle and this is 9:45 candle. So within 15 minutes level duration. So around 15 minutes duration, it reached the target. That's why always I say why high liquidity zones I am focusing is they are giving good results. When they are giving good profits, we identified a strategy. The strategy is how to fine tune the high liquidity zone. That is only the strategy we defined. That you have to do manually. But high liquidity zones are identified by our software. There you don't require any manual work. You just need to trust the software. That's it. Because sometimes software also will fail, right? Because we got 3 stop losses during last month. Compared to around 50 plus trades or 45 trades. Last month means November month we got 45 trades, high liquidity trades, executed trades. Out of these 45 executed, 3 are stop loss. Remaining all are successful. Because that whether it is the number is very small or number is average or number is big, whatever it is, when something is failed, we have to say there is a failure percentage is there. Even if it is minimal, there is a percent. Why sometimes it is going to fail? There are reasons, we have identified few reasons. That's why we are minimizing always the risk. See how we minimized the risk today. But even then, the small minimized area price went and then it came down and finally reached this target. Even though there is a professional gap, still we were able to fix 6 points. That means even though there is a professional gap, we are predicting in advance, at least within the professional gap area, 6% probably the prices will go down. Okay. Now, what is the profit we got? 10,151 rupees. This is the value. 10,151. Bajaj Finance. But the strategy we applied here is because there is a professional gap is there, we have a doubt because of the gap, whether is it really going to reach the target or not, we have some doubts. Maybe sometimes the supply may consume the entire pending orders in the professional gap may reach because this is a high liquidity zone. But even then we have doubts. When you have doubts in your mind, follow this technique. Let me explain one more, because one more chart also executed exactly the same way today. So that's why we have a very good learning. In case if you have any confusion in understanding this calculation, you can observe in the next chart. What is the next chart? Conquer. Same thing happened for Conquer also. So let me show you. Conquer is a high liquidity supply zone. We have a rally, base, drop, and prices haven't entered into this. But just before entering into this, there is a huge rejection. That itself is indicating this zone is very strong. And inside this, we have fine tune. Here you have one more learning here. For fine tuning, you have, before that, let me show you what is the lot size. Because to understand here, there is one more complexity I have faced, that is risk calculation. How I managed the risk, let me show you. That is also another learning for you. So 1,000 stocks are there. That means every one rupee prices go down, you get a loss of 1,000 rupees. Remember this point. Why I am telling you to remember this point? We are going to do risk management based on this point very soon. That is going to be our learning. But meanwhile, let us see. Its investment is lesser than the previous one. That is Bajaj Finance, we have even more investment. This is 1,42,633 rupees. Observe very carefully. Here you are also learning one more point about the risk, how I managed the risk. After that, after explaining that, let us get into these calculations. Okay, this is the 75 minutes zone I identified. So I went to 75 minutes time frame. See, first always we go to daily high liquidity zone if it is a daily HLQ. Then after that, what we do, this is a HLQ strategy. Inside daily HLQ, we identify a fresh 75 minutes. So here we have identified a fresh, we have a leg candle, base candles, and then a drop candle. This is the way identified a fresh 75. Inside this 75 minutes, what you do, you identify 15 minutes zone. But when is this zone is created? In November 2022. Okay. November 2022 means almost a year back. (15 minutes). This is 15 minutes zone. So this is supposed to be your 15 minutes zone. Let me mark supply zone. This is 15 minutes zone, but inside again I fine tuned here. How I fine tuned, I will explain very soon. But let us go to the 5 minutes. That is more than 1 year. Data we need to refer. See here, the zone is started here. This is November 2022. But when trading view data is available, from December 22 only trading view data is available. I have taken a premium package. So trading view is giving me 20,000 candles, last 20,000 candles. Trading view is also providing last 40,000 candles. For that I need to pay 5 lakhs rupees for taking the subscription. So I am not in a position to invest that much 5 lakhs rupees every year. So I limited to premium level, but I didn't have sufficient candles to fine tune at 5 minutes level. Then how to fine tune the 15 minutes zone? Okay, generally you say take type 2 entry or type 3 entry. That is the answers you will be getting from you, right? Okay, let us see. Type 2 and type 3 will helping to manage our risk. Observe carefully. This is a very important learning. If I take type 2 entry, or even if I go for type 3 entry, see the risk. What is the value here? The high of this candle. The high of this candle is 811.95, sell 812 rupees. 812 minus, what is the entry? Entry is the closing of this candle. High of this candle means, highest body of this candle. The highest body of this candle here is, because this is a green color candle, so close. What is the close value? 805 rupees. 805 60 paisa. 805.60 paisa is our entry. What is the difference? Into 1000. That's why I told you, remember the lot size. 1000 rupees. Every 1 rupee we are losing because of the risk. 6,400 rupees. But what is the maximum risk we can bear? Up to 2% level. Or maybe, as per me, previously also I told you, as per me, I can bear up to a 3,000 or 3,500 maximum, not beyond that. So what I decided, let us say for example, I want to handle maximum 3,000 risk. If the stock is against to me, losing 3,000 is acceptable to me for one future lot. I don't want to afford beyond that. So in that case, what to do? You have an option to manage the risk. There is no rule that you have to take the bodies or the highest body of this or the lowest body of this. There is no such kind of rules. This is one technique, easy technique for you to understand. So for me, because the risk is, because I know how much risk I can manage, 300 risk. So maximum 3 rupees loss I can bear on each step. Because for every 1 rupee change, we are losing 1000 rupees. So maximum 3 rupees. So what I did, I disabled this magnet, because magnet always fix this candle body, high or low. So that's why manually I just moved this up to this area. That is what already I have drawn, so I am deleting this. See here up to here. Okay, what is the high of this candle? 812 rupees. 812 minus 3 rupees. 809. So I kept my mouse at 809 rupees. See here? Look at the left side on the scale. Look into the scale on the left side, extreme left side. So here, what is the value? 809. See, 811.95 is zone high. 809 is my entry. So what is the difference of 811 point? That is 812 minus 809. That is 3 rupees. So if prices get into this area, then only I want to trade. Otherwise, I don't mind in missing this trade. I don't mind in missing this trade. Because I can't take highest risk. If prices get into this area, yes, then I will take. We have two chances here. One possibility is there are higher chances of missing. Generally, the type 3 entry itself higher chances. Again, what I did, even above the type 3, I have reduced the risk. Because I am not in a position to accept the more risk for this stock. But if prices enter into this area, I don't mind taking a risk of 3,000. So sometimes you can do such kind of technique if your risk is very high. But here the problem with this technique is there are higher chances of missing the entry. Not a problem. The reason is every day we have good number of stocks in our list. Our software is providing us a minimum stocks every day. If those stocks are not able to trade, at least from the previous day report, the best stocks we can select. That is also, that possibility is also there. So that means always every day in our hand we have good number of stocks, especially high liquidity zone stocks. So even if I miss the entry, no problem. Suppose due to any we are lucky on that day, we got an entry triggered, so we will get an entry. That day is a bad luck. Even though the price entered into this zone, we took the entry, but prices broke this zone. No problem, because the risk is very minimal. We are losing only 3,000 rupees. See, that means we created a safe scenarios around us. We are not taking a heavy risk. Why we are not taking heavy risk? Because every day software reports are available with us. That is helping us to build our confidence. Even missing a trade, not a problem. Even if you miss one trade today, even if you don't get a single trade executed today, no problem. Tomorrow again our software is providing, maybe tomorrow it will, because previously I remember in the month of October, continuously 4 trading days, we didn't get even a single entry. Prices did not reach into our zones, high liquidity zones, in the month of October. If you look into the Excel sheet, you will understand. There was a big gap around 3-4 days, I guess. In the month of October, we didn't get a single entry executed on that day. No problem, because the day when the trade is executing, our zones are working very well. So that's why, with that confidence, I have minimized the risk to only 3 rupees level. Within the 3 rupees level, if prices enter, I will take the entry, otherwise I don't take. Now see what happened today. Remember, this stock is from our Thursday's list. Why we took this much risk, this much fine tuning? Because TradingView is not providing us a 5-minute zone to us. Maybe there could be a 5-minute zone within this fine tuned area. Maybe there could be. So today the price entered into up to this level. Now see the rejection, huge rejection, and finally reached the blue color area. Actually, what is our target is supposed to be? Our target is supposed to be this. Or if you consider all these candles, 1, 2, 3, 4, 5, 6, 7 candles, this is also your target. Maybe if you consider like this, it reached the target, but at the time of my calculation, I didn't consider this. Demand zone. Just reached, but I didn't analyze. I looked this as a leg candle. Sorry. I have considered this as a leg candle and base candle with a gap up. There is a leg out. It is a ERC candle. The hidden body I added here. Generally, the zones having hidden bodies are generally they act as a very strong, and moreover, there is a big professional gap is there. So according to the professional gap, I can keep a target like this. Sorry. Because at least prices will reach up to this gap area. So that means our profit margin is going to be up to this second blue color area. But now what we are discussing, we are not discussing about setting the target based on the professional gap. We are discussing about setting the target based on our 6.1% return on the investment. So what is that 6.1% area I am explaining? So that's why focus on that particular point. Today's training is how to mark 6.1 target area. What is that calculation part? That is what I am explaining. So focus on that. So for that I am deleting this line. This blue color line is the 6.1% area. How we calculated previously explained, same exercise again let us repeat, so that you understand in a better way. What is the first step we take? We go to margin calculator. There we identified 1000 rupees is the quantity and 1,42,633. But morning when I calculated, that is 1,42,300 rupees. But anyway, there is a small difference, 300. Let us consider the latest value for your understanding purpose. So I am copying this. Okay. So what is our target is supposed to be 6% of this margin value. This margin is the cost of one futures lot. That is our investment. So today we get at least we are expecting a 6.1% return on this investment. So that's why this 1,42,633 into 6.1% divided by 100. That means we are going to get 8,700 rupees profit. This is supposed to be our profit, 8,700. Okay. Then what is the profit on each share? Each share means you need to look into the net quantity. Net quantity is 1000. So when you want to, what is the profit for each share? So 8,700 divided by 1000 net quantity. That means 1000 shares. Now you will get single share profit. So on one share, 8.7 rupees profit we are expecting. That means after reaching our target, if prices go down by 8.7%, 8.7 rupees, 8 rupees 7 paisa, if prices go down, then we get our profit. Which profit? 6.1% ROI profit we get, which is equivalent to 8,700 rupees. So that's why what you have to do from your target, because it is a supply zone, from your entry, you need to deduct this value. If it is a demand zone, from your entry, you need to add this value. Demand zone, you need to add the value from the entry. If it is supply zone, you need to deduct the value. That point you should remember. Because prices will go down from supply zone. From demand zone, prices will go up. Okay, in our example, it is a supply zone. What is our entry? This zone low. That is 809 rupees. 809. minus 8 rupees 70 paisa, 8.7. So 830 paisa is our target. See here, the blue color line, what it is showing? Look into the scale. 830 paisa. So from the entry, the prices come down to blue color area, which is your 6.1% target. But if you would have marked professional gap area, the second blue color line, based on that you would have got even more profit. That is a different story. But have we got our minimum average ROI or not? That is what our question. Because we identified 6.1% return ROI is the minimum intraday profit during the trading day, during the intraday. So that way it reached 6.1% for the first blue color line, top one. Let me delete the second one. So today, in which candle it reached? 915 itself. 915 candle itself, it reached the target. See, generally most of the times what we do exactly at 9:15 minute candle, we avoid our trades, 9:15. Maybe few candles at 9:15. Because there will be some gaps that will disturb our trades. The morning, whatever the gap, when the market gap up, market opens with gap up. Sometimes price may go beyond our supply zone until volatility will set. Basically, the volatility is very high at 9:15. But sometimes that is also an opportunity, sometimes. But sometimes that is also very dangerous. So that's why those who wants to manage risk, they want to avoid such kind of trades. We don't want trades based on a heavy volatility because it is totally unpredictable, the volatility. They wait for few minutes. Once experienced traders, they identify, okay, now volatility is controlled. Then they look for the trades. Generally, it takes first few minutes time to stabilize the volatility in the market. But otherwise, that way we avoid this trade, even though it is successful. But why I'm demonstrating, just to teach you this concept, how you can calculate your target well in advance if your 15 minutes target is not clear. Why my 15 minutes target is not clear here? Because there is a professional gap. In such kind of scenario, sometimes your 15 minutes target is too much. See, we have seen today for Jindal Steel. It is too much. The target is too much. See, we got 11.52% ROI today. If it would have reached this target, probably it could be about 12% ROI today. Narrowly missed, but otherwise it could have been more than 12% ROI. In a rare situations, it will achieve. Most of the times, it will fail to reach that much target. Or narrowly also it will fail. That is what happened today. See, it didn't reach the target. But we adopted another technique. That is a different story. And that we already discussed also. So when you know well in advance, we may miss this target. When you have such kind of doubt is there in your mind, what you can do? You, based on 6.1% ROI, you just calculate, and there you draw a line, some horizontal line. If you draw, maybe somewhere here, let us assume 6 point. Once prices reaches here, you will exit from here. Don't be greedy always. Got it? This is the best way to achieve our intraday average ROI returns. Sometimes your 15 minutes itself is not giving enough target. Assume your 15 minute zone is somewhere here. Let us assume. I'm just blindly drawing a zone. Just assume this is your 15 minutes target. If you calculate it is getting, let us assume you are getting only 4% return on the investment. Now keeping 6.1%, and if you draw a line like this, don't do such kind of things. First, always respect the demand zones. If demand zone is not there, then you follow this technique. If you have a 15 minutes demand zone like this, and if the ROI is, if you calculate till this demand zone, if you are getting only 4%, you have to respect that 4% only. Do not expect our average intraday is 6.1%. It is definitely this demand zone is going to break, and it will reach 6.1% ROI. Don't assume like that. That is a wrong understanding. 6.1 is not a compulsory achievable ROI. It is average one. Average means few trades are like 4% return. Few trades are 8% return. Few trades are maybe around 6% return. If we average all these things, then we achieved the 6.1%. 6.1 average, it doesn't mean it is a compulsory ROI. They will change depending on our demand zones and supply zones. First, always you have to respect the nearest demand zone that is there, even if it is giving a short profit like 2.9% or 3% or 4%. That day, for that particular stock, you have to compromise with that profit only. Do not expect 6.1%. Then you may ask why we are calculating 6 point. When heavy targets are there, at the time you might be having a doubt in your mind. Is price is really going to reach that 12% ROI or 11% ROI? Is it going to reach? You might be having a doubt. So at the time this technique will help you. We just draw the line and compromise with that profit. 6.1 itself is a very good amount for you. That itself is a big amount. Remember, the intraday traders, the normal intraday traders, 2% ROI is an excellent return for them. You talk to the people who are doing trading during the intraday. One trade, they do not expect more than 2%. Most of the people compromise for 1% itself. They take multiple trades. One stock, 1%, another stock, another percent. That way they get some 3%, 4%, or 5% return during the trading day. But for us, high liquidity zone, single stock itself is providing excellent ROI. The reason is we are not doing intraday trading. We are doing short-term trading, but target is achieved during the intraday. That point you should not forget. All our trades are not intraday trades. They are all short-term trades, but achieving the target during the intraday itself. So this is about today's session, to share my experience, how we can identify how we can calculate 6.1% target. I already explained with 2 examples. In case if you have any confusion, go through the examples once again. You take a pen and paper, go to the zeros of margin calculator, repeat the steps. Once you repeat the steps on your own, you get clarity. Sometimes when you are listening, you may miss some clarity. The moment you write on the paper, you get 100% clarity. Moreover, they are very simple mathematical steps. Some 2 or 3 steps only we discussed. That's it. That way you will at least minimum 6.1, which level it is there. Is our demand zone is below 6.1% level or above 6.1% level, you will be knowing. Your demand zone means your target demand zone. If the entry is at the supply zone, that is what I meant. Okay, this is about a lot of time we spent for discussing this. Now let us generate demand and supply zones quickly. So entry time frame daily. Let us generate demand and supply zones for daily time frame. Entry time frame is daily. Let us find the stocks near demand zone. So 5 stocks are identified near the demand zone. Any high liquidity demand zone? No. No high liquidity demand zones. So let's go back. Entry time frame is daily. Let us find the stocks near supply zones, daily supply. Excuse me. Stocks near daily supply zone. So we have Bandhan Bank high liquidity supply zone, which is a fresh zone. NMDC is already pierced, so you cannot consider this. Ramco Cement already tested 2 times, so you have to fine tune properly by finding a fresh 75-minute zone inside daily high liquidity zone. Then you can plan your trade. Or you have to look for a deep entry if there is. See, first always you have to check, is this zone going to fail? I already explained when a zone is going to fail. No, if it is not going to fail. When you can say it is not going to fail, probably there could be a fresh 75-minute zone. At least it will give some confirmation. So that way you do your analysis. Next, UBL. UBL is also tested twice. And moreover, UBL is moving between high liquidity demand zone and supply zone. Maybe you also keep this stock in your watch list. But supply is tested 2 times. You need to check whether any fresh 75-minute zone is available. Otherwise, there are higher chances of this zone will fail. So you have to do this analysis because you know demand and supply zone concepts. So you have to apply. Those who already learned a demand and supply zone course, and those who are currently learning demand and supply zone and listening these videos, do not plan any trades until you complete second phase of this training program. You just observe these things. Few things you may not be in a position to understand. The reason is you haven't learned few concepts. You will be learning in the next 1 week or 10 days time period. So this is about stocks near daily supply zone. Let's go back. Entry time frame is daily. Let us find the stocks which are closed inside demand zone, daily demand zone. So 6 stocks are closed inside the daily demand zone. So let me go back. Entry time frame is daily. Let us find the stocks where price closed inside daily supply zone. We have a big list. Let me scroll down. So 55 stocks are there where price closed inside daily supply zone. Let me go back. Entry time frame is daily. Let me find the stocks tested the daily demand zone. Only one stock is filtered. That means one stock is tested today, demand zone. And after that it is moving towards the supply zone. And entry time frame daily, let us find the tested daily supply zones. So a good number of stocks are tested the supply zones. So total 31 stocks are tested the supply zones, daily supply zones. So let's go back. Entry time frame is daily. Let us find the newly created demand zones. Stocks having newly created demand zones. So good number of stocks are having demand zones created newly. So total 32 stocks are having newly created demand zones today. Because today is a bullish day. And entry time frame daily, let us find the stocks having newly created supply zones. Only one supply zone is created today. Don't think this is a supply zone is created and peers. No, the one it is showing is nearest supply zone. The report always shows nearest supply zone. Probably there could be LOTL just above, overlapped with the supply zone. Because the supply zone is nearest to the price, it is showing. The newly created zone is not displayed in this list because it might be a little far away from the current price compared to this peers supply zone. That way you have to understand. That means this peers supply zone and newly created supply zone both are having a LOTL level on the top of the level. So in that process, this is nearest to the price. That's why report, because clearly also I told you clearly earlier. The one nearest to the price will be displayed in this report. If you really want to know what are the supply zones created, you can look into the other reports. That is demand zone chain, supply zone chain. I already shown you earlier. They are stock specific. Okay, let's go back. Now let us generate demand and supply zones for all these stocks. Entry time frame is daily without any filters. I am generating the complete list for our reference purpose. So I keep on scrolling this list. Whichever the stock you want to refer, you please pause the video. Okay, total 201 stocks. Now let us generate demand and supply zones for all the time frames, stocks near demand and supply zones, starting from yearly to 5 minutes. Let me start with yearly. Let us find the stocks near yearly demand zone. No stocks are there. For yearly time frame, let us find the stocks near yearly supply zone. No stocks are there. Now the next entry time frame is half yearly. For half yearly time frame, let us find the stocks near half yearly demand zone. So one stock is filtered. So let's go back. Entry time frame is half yearly. Let us find the stocks near half yearly supply zone. So one stock is filtered which is near half yearly supply zone. Now quarterly. Entry time frame is quarterly. Let us find the stocks near quarterly demand zone. So two stocks are filtered. So let's go back. Entry time frame is quarterly. Let us find the stocks near quarterly supply zone. So no stocks are available. Now monthly. For entry time frame monthly, let us find the stocks which are near monthly demand zone. No stocks are filtered. For monthly time frame, let us find the stocks which are near to the monthly supply zone. No stocks are filtered. Probably you can identify stocks inside monthly demand zone or supply zone. Okay, weekly time frame. Let us find the stocks which are near to the weekly demand zone. One stock is filtered. For weekly time frame, let us find the stocks which are near to the weekly supply zone. So 10 stocks are filtered which are near to the weekly supply zone. So let's go back. Daily already we identified 125 minutes. Entry time frame is 125 minutes. Let us find the stocks which are near to the 125 minutes demand zone. So 4 stocks are filtered. Let's go back. Entry time frame is 125 minutes. Let us find the stocks which are near to 125 minutes supply zone. So 4 stocks are filtered. So let's go back. Entry time frame is 75 minutes. Let us find the stocks which are near to the 75 minutes demand zone. So total 7 stocks are filtered. Any high liquidity demand zones in this list? Torrent Pharma is identified, tested once but gave 5 rejections. That means you need to look for a fresh 15 minutes zone inside this. So or you may find, because there are so many rejections, there is a possibility inside this 75 minutes there could be a high liquidity 15 minutes zone or 5 minutes zone might be there. That's why these many rejections has come. So let's go back. Entry time frame is 75 minutes. Let us find the stocks which are near to the 75 minutes supply zone. So 6 stocks are filtered. Any high liquidity supply zones? Hindustan Copper is already tested 5 times. So you need to look for a fresh zone inside or a deep entry. There are 2 possibilities. You have one more, ICICI Prudential, already tested 2 times. Previously also, I think once or twice we got the entries inside this. We got profitable trades from this. So look for a fresh zone or a deep entry or a high liquidity at 15 minutes or 5 minutes. So these are the 75 minutes high liquidity zones inside from this list. Now let's go back. 25 minutes. For 25 minutes time frame, let us find the stocks which are near to the 25 minutes demand zone. So 2 stocks are identified. So let's go back. Entry time frame is 25 minutes. Let us find the stocks which are near to the 25 minute supply zone. So only 4 stocks are identified near to the 25 minute supply zone. So let's go back. Entry time frame is 15 minutes. So for 15 minutes time frame, let us find the stocks which are near to the 15 minutes demand zone. So 6 stocks are identified. Let's go back. For entry time frame 15 minutes, let us find the stocks which are near to the 15 minutes supply zone. So 2 stocks are filtered. So let's go back. Entry time is 5 minutes. For 5 minutes time frame, let us find the stocks near to the 5 minutes demand zone. So these 3 stocks are filtered. So let's go back. Entry time frame is 5 minutes. Let us find the stocks near to the 5 minute supply zone. So these 8 stocks are filtered. So this is about today's report generation and stock analysis about HLQ zones. So let us all meet again in our next video. Thank you.